So I want to talk about Asia Pacific, but first, as we're watching Queen Elizabeth and we're watching Buckingham Palace, let's talk about Europe from Mary's point of view. I know you have a big new home rental initiative. How much of that will be in Europe?
Well, we started our pilot there last year, so we've got about 2,000 units when we launched about a month ago or so. And a big part of that is in Europe. Obviously, you watch this footage of President Trump visiting the UK. There is nothing like the pageantry, which is rolled out for something like this. And it tells you a little bit about how attractive Europe is as a destination, particularly for tourism. American travelers were heading into high season. That business will be quite strong this year for hotels, and I think for the homes and villas business too.
This home rental business is perceived by some, at least, as a direct charge into Airbnb territory. Is that fair? Are you taking on Airbnb?
Well, we're not ignoring Airbnb, certainly, but this is sort of a different focus. I think we've watched this business evolve over the course of the last decade or so. A big chunk of it has been really about the cheaper stay, you know, the extra bedroom or the studio apartment. That's not the focus of our business. The focus of our business is to deliver something that we can have the brand stand behind so that people can feel like the experience they're getting is not risky. Right, so they have the services standing by, they have key rental, they have a clean apartment, and so we're going into the whole home space, which you could say is sort of the upper end of that market, not just in terms of luxury brands, but in terms of square footage and appointments, if you will.
And as you say, you have your brand, you also have your loyalty program, you've got an infrastructure. Does that give you a leg up in that business, essentially?
Absolutely. The general thesis here is that the Bonvoy loyalty program, which envelops all of our 30 brands, including homes and villas, will be the connection. So you can earn points staying in homes and villas, you can redeem points staying in homes and villas, and you end up with a connectivity that our competitors really don't have in this space.
Arne, moving to your ambitious plans in China, on the last earnings call, I want to read to you what you said about China back in March 1st. You said China and the U.S. Seem to have stepped away from the brink recently on the looming trade war. While we're a bit more cautious than we would have been at the beginning of 2018, I think we remain pretty optimistic that China will be a positive market for us and continue to present exciting growth opportunities. Like 2 months later, what would that sentence be?
It's just another reminder not to climb up the pole of prediction. They say there's only one part of you exposed when you do
March 1st, there was a very different world than March 1st.
It was a different sensibility. It's interesting. Obviously today, given the trade conversations, we're much more apprehensive about where the relationship is going. Business conditions on the ground in China sort of reflect the Chinese economy, which is diverse, it's big, and so we see markets like Beijing and Shanghai, which are meaningfully stronger than some others. One thing I think that we forget as Americans typically is our business in China is really about the Chinese economy. The majority of our guests in hotels in China are Chinese, even in markets like Shanghai. And so the question ultimately becomes not what's happening with trade narrowly, but instead, what is the impact of trade conversation on the way the Chinese GDP is growing? And one of the reasons for a bit of optimism still, even in the midst of all of this, is the Chinese are transitioning to more of a consumer economy. They know that's important for domestic political reasons. That tends to be a driver of demand in our space. So while we'd be a little less optimistic because of the tone than a few months ago, I think we stay quite optimistic about China long term.
What we're watching out of the corner of our eye here is the completion. I think they're nearing the end now of the review of the Royal Guard. That's the President of the United States, flanked by Prince Charles on the porch of Buckingham Palace. And when this ceremony is over, then they're going to go in and have a luncheon, a light luncheon with Queen Elizabeth there on President Trump's right, and then, of course, the First Lady to the Queen's right and Prince Charles on the President's left. Coming back to China now and your relationship there, you said it's more the Chinese economy than it is really trade relations. We just heard over the weekend that perhaps China might be looking into FedEx, and there's this list of unreliable entities that they have. Are you concerned, have you seen any evidence that the Chinese government might take action against your interests in China, because you could become sort of an innocent bystander that's really injured in this trade war?
We haven't seen that yet, and of course we don't know the direction things are going. We do know that of the 350 or 360 open hotels we have in China, 100% of them are owned by Chinese real estate partners. So we manage that business for Chinese real estate investors. And so our economics are not sort of simple American economics. Yes, we're an American company, we earn management fees from it, but the bulk of the profits go to Chinese investors. How you play that politically, you know, we'll have to see.
Do you allocate capital differently, though, in different regions of China? if you'll be more levered to the consumer and therefore less macro, but then the macro eventually goes to the micro? Like, how do you then allocate?
Well, again, because our partners are Chinese real estate investors, the bulk of the capital is coming from our Chinese partners. And they are making decisions about local demand. Sometimes that is hotels that are married to residential or commercial developments that make the whole thing work. They understand those markets better than we do, and they certainly understand how to build hotels better in those markets than we do. I think we would shudder to be a sort of local real estate developer.
At the same time, you've made some very ambitious plans for China, as well as for Asia more generally, but building a lot of hotels, adding a lot of rooms, based, I'm sure, in part on projections of Chinese growth of the Chinese economy is 6+%.
Yeah.
And now we have people saying, if in fact the United States follows through on all the tariffs that they're proposing, and there is some China retaliation, we could take a percent and a half off of that growth rate. Does that change the calculus for Marriott as they look at the longer term growth, not necessarily specifically because of the trade war, but because of what it might do to Chinese growth?
In the near term, the question will be, how does that impact what Chinese real estate investors decide to do? I think one reason that I don't worry overly about this long term is you see Chinese domestic travel and Chinese outbound travel growing in excess of 20% a year. And that's that shift to the consumer economy.
And, you know, typically when we see a slowdown in China, the market, and everyone seems to think, okay, well, the government's going to step in some way, whether the PBOC or the government, and stimulate. Do you see that? Have you seen that on the ground? Do you feel like it's going to have the same impact as it might have a year and a half ago?
Yeah, this gets beyond my level of expertise. I mean, I think we are seeing that the Chinese government obviously cares dramatically about the growth of the Chinese economy and its impact on the life, if you will, of Chinese citizens all around the country. And so they're trying to create economic opportunities. Obviously, in the midst of all these other things, they've got a great urbanization trend underway where they're continuing to move tens of millions, if not hundreds of millions of people to the cities, sometimes new cities, but away from the countryside. And they've got to make sure that they continue to create economic opportunities for folks. And they have levers to do that, which they've shown over decades that they will use, and use fairly sensibly.